There are other ways where the money supply is increased. And to understand this, you need to understand fractional reserve banking. Money used to be, most likely, precious metals, gold or silver. In some cases it was salt. All kinds of things have been used as money. But the money of choice for millennia has been gold and sometimes silver. Why? Because it was a way of fixing a value. It didn't vary like this. You have X amount of gold that you use to pay for X amount of goods and services. Okay, so the price has to remain stable because there's only so much gold to go around. Well, what happened? Well, something really interesting happened. Okay, you had these people called goldsmiths. And they were the people who had the bullion, and they were the people who melted stuff down. As the gold was brought in, they would melt it down and put it in chunks or blocks or whatever. All right? And then when you wanted to buy something, well, you paid for it with gold, but that was a little bit unwieldy. They made coins out of it, but that made you really at risk for robbers because you got this big heavy bag of gold coins carrying around. It makes a lot of racket. It attracts a lot of attention. Everybody knows what's in that bag. So people didn't want to be hauling around the gold. So they went to a goldsmith and he kept the gold and he wrote you a receipt. So suppose you had 100 whatever, you had $100 worth of gold and you took it in and you gave it to the goldsmith, all right, and he gave you a receipt. That receipt was as good as the gold. And that's where the expression comes from in the English language, good as gold. The receipt the goldsmith gave you was as good as the gold it represented. Well, now goldsmiths, being enterprising people, it didn't take them long to figure out that they had a lot of gold and the receipts were used in trade and everybody didn't ask for their gold at one time. The receipt could be brought back and redeemed for gold, but an interesting phenomenon was nobody asked for it all at the same time. So what did they do? They started handing out receipts. And they found out that if they kept 1/3 of the value of the gold, they could write receipts for 2/3 of the rest without risking everybody asking for their gold at the same time. So what they just created was a fractional reserve banking system. They were putting out more receipts than could be actually redeemed for the gold. Now, why did the goldsmiths do this? Well, when they gave you a receipt, they charged you interest on that. And you see the difference between a gold standard and fractional reserve banking is gold doesn't earn interest. Even today, you can buy gold bullion. You can buy gold coins. But that's it. It's not like you're going to get interest on that gold. You got the gold. And that gold's worth whatever is the going market rate for the gold. But you put your money in a bank, that bank pays interest. Well, that's what the goldsmith did. He handed out receipts which you could use for money, but you had to pay him interest. All right? And he handed out more receipts than he had gold, and fractional reserve banking was born. Now, what happens is, when you hand out more receipts than you've actually got gold, what have you just done to your money supply? You have increased your money supply. If you have $100 worth of gold, but you hand out $300 worth of receipts, how much money is in circulation now? You've only got 100, but you've got 300 out there in circulation. You have just increased your money supply.